Hey people, I welcome you all to Caroline's Online Academy. In the previous video, we talked about accounting for issued shares at a discount, which cannot be done because you cannot issue shares at a discount except for as sweat equity. And only what is sweat equity is there in syllabus and how to account for it is not there in the syllabus, so we need not study that. Okay. Now, in this video, we're going to be talking about calls and arrears. In order to understand how to account for issue of shares, when there is calls and arrears, we need to first understand the meaning of the term arrears. So let's look at what arrears means. If you Google the meaning of the term arrears, it's nothing but money that somebody owes that he or she should have paid earlier. That is, when the money that is supposed to be paid at a certain point of time is not paid, then that particular amount is called as arrears to the person to whom the money has to be paid. Understood? So how does that come into effect in accounting for shares? The company, after allotting shares, makes first call, second call. I mean, makes after allotting shares, it makes the allotment money due, and then it makes the first call due, and then it makes the second call due. So it basically makes the calls due. And if a shareholder who is supposed to pay the calls on a particular date defaults, does not pay the money for that particular call on the due date, on the date on which it is supposed to be paid, then the amount payable by him shall be calls in arrears. Understood or not, my dear children? The total amount of money receivable by the company which has not yet been received even after the due date will be the calls in arrears. Understood? So let's see how to account for it using this problem. Here we have Vishnu Limited, which issued 1 lakh shares for rupees 100 each payable as follows. In application, it called 25 rupees along with allotment 30 and first call 30, second and final call is the remaining amount. The company received 1 lakh applications and allotted in full. One shareholder, Harini, holding 1000 shares, did not pay the first call. We need to pass the necessary journal entries. So Harini defaulted. She did not pay the first call. Understood, my dear children? Well, let's first find out the amount receivable with second call. The issue price of the share is 100, and in application we received 25, and allotment 30, and in first call we are receiving 30. So we received 85. So along with second and final call, we're supposed to be receiving 15 rupees. All right, let's go ahead and account for this and understand how to account for calls and arrears. The first journal entry is going to remain the same. We have received the application's money, so the journal entry is bank account debit to equity share application. The logic behind that has been already explained in many videos earlier. In case you don't understand the logic, please refer to the video which talks about the journal entries for issue of shares. Equity share application account. It will be the number of applications received into application money per share, which happens to be 25 in this case, and therefore it is 1 lakh into 25 lakhs. Application money received. Alright. The second journal entry is in case there is a rejection, that is, if the company had rejected any share applications, then the application money received on the rejected applications are supposed to be refunded. But in this case, the company has not rejected any applications. It only received 1 lakh applications for the 1 lakh shares it issued, and therefore has allotted fully. So the next event would be allotment, and the first transaction after the shares have been allotted would be to transfer all the amount that is there in equity share application account to equity share capital account, as it has become the capital of the company now. Again, the logic for this has been explained in earlier videos. Shares allotted, okay. And then we need to make the allotment money due. The allotment money happens to be 30 rupees per share. Allotment money will be made due for the number of shares allotted. So equity share allotment account debit. The journal entry for making allotment money due, as you all very well know, is equity share allotment account debit to equity share capital account. The logic has already been explained. Allotment money made due. All right. And the allotment money made due will be number of shares allotted, which is 1 lakh in this case, and in multiplied by the allotment money per share, which is 30 lakhs. So we make the allotment money due. Once we made the allotment money due, we would receive the allotment money. The journal entry for receiving allotment money is bank account debit to equity share capital, sorry, allotment, and that would be what, my dear children? 30 lakhs. Allotment money received. Okay. The next thing the company would do would be to make first call due, and the journal entry for that would be equity share first call account debit to equity share capital account. And that will be how much, my dear children, in this question? I think it was 30 rupees. Yeah, 30 rupees. Even though there is calls in arrears and first call, that doesn't make a difference because we wouldn't know if Harini had paid or not when we make it due. Only after we make it due, all the shareholders would pay. And when Harini has not paid, we will come to know that she is not paid and we'll account for calls in arrears in the next journal entry when we receive the first call money from the shareholders. Okay. So equity share first call made. Now, from the question, we understand that Harini did not pay the first call. Harini, holding 1,000 shares, did not pay the first call, right? So, when we receive the first call money, all the other shareholders would have paid except for Harini. So, when someone who's supposed to pay you does not pay, we still hold the right to receive that money from them. Am I right? But in order to differentiate that from the equity share first call amount that we had received at the right time, we'll maintain this amount that we have not yet received in a separate asset account called as calls and arrears account. Under modern approach, calls and arrears is an asset account, and under traditional approach, calls and arrears is a personal account. It is that account that keeps track of the amount of shares of calls that have not yet been paid, though the due date has elapsed. Okay. So Harini was supposed to pay the equity share first call along with all the other shareholders. But even after all the other shareholders are paid, even after the due date, Harini has not yet paid. So we're going to keep that money that was due from Harini in a separate account, recognizing the fact that she is delayed and defaulted, but we are yet to receive that money from her, right? We still have the right to receive money from Harini, right? So that account is representing Harini and it is actually an asset for us, our right to receive the money from her. So when an asset account increases, we debit it. So calls in arrears account will be debited. When there is calls in arrears in a particular call, when you receive the money from other shareholders, you account for the calls in arrears. So bank account will be debited because you're receiving money from other shareholders. You're debiting calls in arrears account because from equity share first call account, we're keeping that portion that are in arrears to a separate account called calls in arrears account to keep track of how much is in arrears. And then equity share first call account will be closed. Now the journal entry, we know that equity share first call will be credited for 30 lakh rupees. And then we'll find out the total amount of calls in arrears. We know that Harini did not pay the first call. Am I right, my dear children? And Harini was holding 1,000 shares. Am I right? And on each share, she was supposed to pay 30 rupees because 30 rupees is the amount due on first call and that she did not pay. So what is the total amount of money that Harini was supposed to pay but she did not pay? That is 1,000 shares into 30 rupees and that is 30,000 rupees. But for Harini, everyone else paid. Am I right, my dear children? So 30 lakhs was totally due on first call, and everyone else except this 30,000 was received by the company. The money from everyone else except this 30,000 was received from the company. The total amount of money received by us would be 30 lakh minus 30,000, which is 29 lakh 70,000. Equity share first call money. So we've received the equity share first call money. The next thing that we need to do would be to make equity share second call due. Please listen to me carefully here. Even when Harini has not paid the first call, she's still the shareholder, and we'll make that amount due for her also. We'll make share second call amount due for Harini also. It is not like we will not make it due for her. Okay. So equity share. Okay. equity share second call. We'll make it due for all the shareholders. That is the 1 lakh shareholders, including Harini. And second call was 15 rupees. Am I right, my dear children? As calculated by us in the beginning of the problem. So equity share second call made due. All right. So we made equity share second call due. Now it's time for us to receive the money. And when you look at it, Arni is someone who has not paid the first call. So do you think she would have paid the second call? She would not have. Even if she had paid, then even that money would be, even if she had paid, even that amount would be set off against first call. And if she had paid extra, only then it will be set off against second call. But the question does not say that Harini has paid. Am I right or not, my dear children? So if someone has defaulted first call, unless and otherwise the question specifically provides that they later on paid, you're supposed to assume that they did not pay and they did not pay the further calls also. So if the question says that Harini did not pay first call, it automatically implies that Harini did not pay any of the calls after that. Unless otherwise the question tells otherwise. Understood or not, my dear children? So that would be equity share first call will be 15 lakh, the amount that we made due. And the amount in arrears would be Harini is the only person who didn't pay and she was holding 1000 shares. Am I right? So on the 1000 shares, she didn't pay the 15 rupees per share that she was supposed to pay. So the total amount of arrears would be 1000 into 15, which is 15,000, and amount received by us in the bank would be the rest of the shareholders paid, and therefore 15 lakhs minus 15,000, 14 lakh 85,000. So that is how you account for calls and arrears, my dear children. Whenever there is calls and arrears, you account for it when you receive that amount for that particular call. Everything else is the same, and you might be wondering how to account for it when more than one shareholder does not pay. And that is what we'll be looking at in the next video. So you people like, share, and subscribe, and comment any feedback that you might have in the comment section below. And see you again. Bye.